While most traders fixate on Bitcoin's next move, Uniswap just printed something significant. A $170 billion monthly volume record, over 20,000 hooks deployed on version 4, and the first green Heikinashi RSI candle after 12 consecutive red. But here's what nobody's talking about. Uni generates $1.3 billion in annual fees that go entirely to liquidity providers, zero to token holders. If Uniswap implements the fee switch, something that's been discussed for years, this $6 token could reprice violently. I'm going to show you exactly why this setup matters, what the charts actually say, and how I'm positioning for what could be a 5 times move to my third target. Uni is ranging between $6 to $7, down 70% from its December peak at $19. We've been in a brutal downtrend for nearly a year, grinding lower while the protocol itself has been absolutely crushing it. October saw the highest DEX volume in Uniswap's history, $170 billion according to DeFi Llama. Version 4 launched 282 days ago and has already processed over $200 billion in swaps. Base chain integration pushed $19 billion in monthly volume, the largest since January. The disconnect between protocol performance and token price is massive. This is either a value trap or a major accumulation zone. The next few weeks will tell us which. Let's connect the dots on why this matters. Uniswap currently generates roughly $1.3 billion annually in trading fees. Every single dollar goes to liquidity providers, the people supplying capital to the pools. Token holders receive nothing. This has been a pain point for Uni investors since day one. The fee switch proposal would redirect a portion of those fees to Uni holders. We're not talking about some random governance token with no revenue. We're talking about redirecting real cash flow from the most dominant DEX in crypto. If even 10% of fees went to token holders, that's $130 million in annual revenue at current volumes. And volumes are accelerating. 1 billion swaps executed this year alone. That's exponential growth. Version 4 adds another layer. It introduced hooks, customizable smart contracts that let developers build on top of Uniswap. Think of it like plugins for the protocol. Over 21,000 hooks deployed by nearly 14,000 different developers. This creates a moat that competitors can't easily replicate. Solana integration expanded the addressable market beyond Ethereum and Layer 2s. UniswapX now aggregates liquidity across multiple sources, making it stickier for users. On-chain data from Augura shows whale accumulation. Binance outflows hit multi-month highs. Large holders are moving Uni off exchanges during this consolidation. That's typically not what happens before further downside. Critics point to reduced trader engagement and liquidity concerns, but protocol-level metrics tell a different story. Total value locked sits at $745 billion. Version 4 volume already exceeds $200 billion. These are not the numbers of a dying protocol. The fee switch is not confirmed, but the conversation is heating up again. If it happens, this fundamentally changes Uni's value proposition overnight. It goes from governance token to cash-flowing asset. Now let's look at what the weekly chart tells us. Uni peaked at $19 in December 2024 and crashed to $4.70 a few times in 2025. We've been consolidating between $5 support and $8 resistance for 2 months. Currently trading around $6.60, right near the volume profile point of control at $6. That level represents maximum trading activity. It's where price has spent the most time, and it tends to act as a magnet. 2 descending trend lines are squeezing price. The first connects from the December high at 19. The second connects from the August local top at 12. We're currently testing that first trend line. A weekly close above it opens the door to $8, where we hit the 236 Fibonacci retracement level. That's been major resistance since the sell-off began. Moving averages paint a bearish picture. We're below the 10, 21, 55, 100 exponential moving averages and the 200 simple moving average. That green line at roughly 750 can be a brick wall. Until we reclaim it, we're technically in a downtrend. However, price structure is improving. We're making higher lows from that 470 bottom. That's the first step toward trend reversal. Fibonacci levels matter here. I've anchored from 19 down to 470. The 0.5 retracement sits at $12. That's my first take profit. The 1618 extension predicts 2790. That becomes my third target if this rally extends. The Heikinashi RSI just printed its first green candle after 12 red candles in a row. Look at those orange circles on the indicator. Every time RSI has reached these oversold levels over the past 2 years, it preceded significant bounces. We're sitting in prime buy territory based on this oscillator alone. For my position, I'm loading between 6 and 750. That's my accumulation zone. My short-term stop loss sits at 450. A weekly close below invalidates the structure entirely. I would be out of my swing trade. For the long-term holders, as I am, this is still attractive. If we break my stop, I would look to reaccumulate around 350. My take profit targets scale up. $12 first, 19 second, 27 third, 42 fourth. I'll trail stops as we hit each level. So, what's my best case scenario? Fee switch gets announced. Uni reclaims the 200 moving average, and we get a momentum break toward $12 within 2 months. From there, 19 is realistic if broader market conditions cooperate. Worst case, we lose $6 support, retest 470, and potentially break lower if crypto markets correct hard. In that scenario, I'm a buyer at 350. And what changes my thesis? A weekly close below 450 kills the setup. On the upside, reclaiming $8 with volume would be extremely bullish. That's where I would add to my position. Short-term traders should watch that 450 level religiously. Long-term holders can afford more patience. The protocol fundamentals support accumulation, even if technicals take time to confirm. Uniswap sits at a critical juncture. The protocol is thriving. Record volumes, version 4 adoption, and expanding chains. But the token is down 70%. That disconnect creates opportunity. The fee switch remains the wildcard catalyst that could reprice Uniswap overnight. Technically, we're oversold with improving structure, but still fighting major resistance. My strategy: accumulate 6 to 750, risk down to 450, target 12 initially. If you want to understand how to actually use Uniswap for yield strategies, liquidity provision, farming, the complete platform walkthrough, I have compiled everything in my DeFi guide for just $4.99, link in the pinned comment. If this breakdown added value, punch that like button. It pushes this analysis to others who need to see it. Join my free Telegram for faster daily updates, link also in the pinned comment. I recently covered similar plays opportunities. Check those on screen if you want more setups like this one. Thanks for watching, never financial advice, and see you in the next one.